Hello and welcome to today's latest video for Fat Tail Daily. Today I'm publisher James Woodburn, by the way, and today I'm joined with our Friday editor of Fat Tail Daily, Nick Hubble. How you doing, Nick?
Yeah, good to see you, Woody.
And you, mate, and you. By the way, before we go into our little chat on your piece that you've written about the Aussie dollar and all that, on the comment section of your last piece on nuclear energy, that's probably another discussion. I've never seen so many comments on that, so you obviously triggered a nerve there.
Yeah, that's right. It's been extraordinary, actually. And it was kind of designed to do that because we've been arguing in favor of nuclear for a very long time, right? I'm a big believer in nuclear. And the article was about the idea that nuclear doesn't work in Australia. And it was sort of facetious in the sense that my point was you can either go a very high degree of nuclear in your energy mix, so say 70, 80%, or not have any at all. But that spot in between, that like 20 to 30% nuclear in the mix, doesn't work when paired with renewables. And that applies to all countries, not just Australia. There's something about
Yeah.
nuclear and renewables at the same time together that just doesn't work. That's what the article's about. And most of those comments were, pro-nuclear people getting annoyed at me for saying, I think bad things about nuclear, when really the point was we need to go a very high degree of nuclear if we're going to do it.
Well, I think that deserves another discussion. So maybe we'll have another editor on too, and we can chew the fat on that one. But today you're talking about the Aussie dollar and how it has an effect on portfolios. Now you mentioned that half the investment trends you see are terrible for the Aussie dollar, while the other half are pretty good. Can you elaborate on the conflicting trends and how you weigh their relative importance when forecasting the Aussie dollar's future?
Yeah, this is the big challenge for Australian investors because the Australian dollar is so important to their portfolio and it's something that most people ignore. And what's striking about the next 10 years is that the biggest sort of investment stories out there at the moment, government debt levels, demographics, China, all of these sorts of things that we focus on in Fat Tail Daily and our various newsletters, they all have really big implications for the Australian dollar. Some of them are implying that the Australian dollar will absolutely boom. So, for example, our demographics are better, our immigration rates are better, our GDP growth rates are better. The government debt story in Europe and the US is going to lead to probably significant problems in their currencies, which Australia doesn't have those problems because our debts are very low. And then on the other side, you've got these things that are very bad for the Australian dollar, like the commodities bust that's happening now, China's falling growth rates, and probably the net zero obsession and the lack of nuclear. So I can't quite figure out which of the investment trends is going to outweigh the other, whether the Australian dollar is going to go up a lot or down a lot. But my claim in this week's Fat Tail Daily is that answering that question is the biggest decision that all investors in Australia have to make. You and I might disagree about what the fate of the Australian dollar is going to be, given what we like to think about or what we predict about the future. But I think we can all agree on the idea, or at least we should all agree on the idea, that the Australian dollar's fate will determine how your investment mix should look.
Right, because you do sort of state that sometimes the exchange rate, how it can significantly impact investment returns, and you say how sometimes that's actually more than the underlying asset performance. So how do you recommend Australian investors balance their portfolios to mitigate any currency risk while still taking advantage of any potential gains? Because it can work in their favour too, right?
Yeah, definitely. And that's my point is probably the success or failure of your portfolio is going to be determined by how much of your assets are overseas in foreign stock markets and how much of it is at home. So if the Australian dollar is going to fall even more than it already has over the next, say, 10 years or 5 years, that means you should invest overseas so that even if your overseas investments don't go up much, they will go up in terms of Australian dollars. And so you don't even need to be successful in terms of your investments. You buy safe bonds overseas or whatever it might be, you'd still succeed. Whereas if the Australian dollar is going to rise a lot, if you make foreign investments, then even if they perform well, the net outcome, the net return after the exchange rate moves might net out to zero. You might not be getting anywhere. So it's all about that question of whether you should own foreign assets or how many of them you should own as a percent of your portfolio allocations, and that this matters more then which particular investments you decide to choose. And I've got a couple of stories in the article about how that's been true in the past. So some sort of proof of this idea from my own experience, from experience of other people, and explaining how this tends to play out historically speaking. In terms of the advice, I'm trying to keep really neutral in this article about whether I believe the Australian dollar is going up or down, because I don't want my agreement or disagreement with the reader to be the key takeaway. I don't want this to be a story that you should buy foreign assets because the Australian dollar is going down, or you should not buy foreign assets because the Australian dollar is going up. I want this to be specifically about alerting the reader to the fact that this is more important than all of the discussions about whether they buy Apple or BHP or whatever it might be. These particular the fate of those particular individual investments could, in the end, and I think will, matter less than the exchange rate to your investment decisions.
Yeah, gotcha. You also talk about Australia's relatively low government debt as a potential strength for the Aussie dollar over the next 5 to 10 years. But how do you see this playing out in the context of global monetary policies, especially, for example, if other major economies resort to currency devaluation to manage their debt loads? Obviously, I'm talking about the US dollar, right?
Well, there's a blind spot which I've managed to avoid by moving around to lots of different countries over the last few years. Everybody thinks in their own home currency, obviously. Australians think in terms of Aussie dollars and Americans in terms of US dollars. And what happens is each country, especially in Europe and in the US, everybody's saying, our currency is going to crash because we've got so much government debt, and the only way out of it is inflation, which is the devaluation of money. But, currencies are measured relative to each other. So if everyone's devaluing in order to devalue their debt, if everyone's using inflation to try and repay what they owe, then they might, it's not really clear who's going to go down the most. And my point is that Australia's immune from that trend in the sense that we don't have the amount of government debt that makes it necessary to devalue the currency. That doesn't necessarily mean we won't get inflation, as the last few years have shown, right? But the point is, over the next 10 years, say, the Australian government and the Reserve Bank of Australia are not going to be pursuing inflation deliberately in order to make the debt to GDP ratio go down. That will happen in places like the US and Europe especially, and a couple of other places as well. And this means it's sort of one factor in this calculation of what's the fate of the Australian dollar going to be. I personally think it's the most important one, which is why I've mentioned it there. But I also give it, the countervailing arguments about China and commodities and so on and so forth. But I expect over the next few years, Western governments, other than Australia, to really try and devalue their currencies via inflation a lot in order to bring the debt to GDP ratio under control. And if that doesn't happen in Australia, which it shouldn't, then that means the Australian dollar should go up a lot relative to those other currencies. And that implies that you shouldn't be owning foreign investments any longer.
I say, quick question to end then, Nick. Given your expectation that the Australian dollar will get stronger over the next decade, what does this mean for Aussie assets themselves?
Yeah, it really divides the Australian stock market in half. Those companies that own foreign revenues, such as the commodity exporters, will see those revenues fall in terms of Australian dollar terms, which means their share prices will underperform. Whereas the companies that are not exposed to exports, that earn their revenue locally, will be able to outperform. You'd think that travel companies, given Australian sort of foreign-bound tourism, will improve. Those companies will do well. Companies that rely on inbound tourism will do badly because those people will come to Australia as the Australian dollar rises. So you need to not just think about the exchange rate in terms of which assets to invest in overseas, but also how the particular companies in Australia are impacted by the exchange rate, regardless of whether you agree with me about the Australian dollar going up or down. Even if you disagree, you need to factor this in. Just reverse the investment position. And just really focus on the currency. So many investors are just blind to that. They think it's too difficult. They don't consider it to be important. They'll just invest locally, and they'll be mystified by the way in which the Australian dollar ends up determining how their portfolio performs over the next few years.
Let us know what you think, guys. There's a comment section below. See if you can beat the amount of comments Nick got for his nuclear article, which we will be discussing next week. But thanks for your time, Nick. If you are watching on YouTube, make sure you hit subscribe. You'll get notified when a new video comes up. And as always, if you're watching on the Fat Tail Daily website and you're not a subscriber, get your name on the list. It's absolutely free, and you'll get a really informative, insightful daily edition every single day. Nick, you're going to be back with us next Friday. I will chat to you then, mate.
Sounds good.